Hello and welcome to IBTimes TV. I'm Lianna Brinded, Senior Business Journalist at the International Business Times. Joining me now is Christopher Hall. He's the Chairman at Stratex. Hi.
Hello, Lianna.
Hi. So kicking off with the market overall, commodity prices has obviously been quite volatile over the last few years. How has that affected Stratex, if at all, and how has the company tried to mitigate that risk?
We're not being a production company concentrating almost exclusively on exploration and development. We're not as exposed to the ups and downs of commodity prices as we might be. And of course, we are primarily focused on gold, although we do have some byproduct copper. And consequently, the gold market being different from the basic industrial commodities, perhaps we're not exposed to the same kind of risks as other companies. But I think the main thing about being an exploration company is that as you go through the exploration and evaluation process, if you begin to feel that the deposit that you've found is not ultimately going to be competitive and a reasonably low-cost producer, then you would ease off on spending on that project and look to do something else with it, possibly bring in a joint venture partner who had a different view of things.
Sure, and with Stratex, there's actually been quite a few exciting developments for the company in terms of where you've expanded. So can you tell me a little bit about the operations that's happening in Africa at the moment?
It's been an absolutely transformational year for Stratex. We have been telling people what we intended to do for a long time, and finally last year we began to deliver. The biggest thing that we delivered was the sale of a 30% interest of our first million-ounce gold discovery. This was in Turkey, and we had a joint venture partner, Centerra Exploration, who had earned 70% of the project. We had to make a decision whether we were going to continue to contribute to what was going to be a very expensive project in terms of feasibility study and then construction, or whether we should seek to do something else. And after a long and hard thought, we entered into negotiations with Centerra to sell our 30% interest to them. And we're delighted to say that we successfully closed that deal and received the money just in the new year, and received $20 million US, which was equivalent to $64 an ounce for the gold that we sold. And there's another similar amount which will become payable when they put the project into production. They'll pay us a 1% royalty until we've received another $20 million. That obviously has put us in a very strong financial position. But we have done another similar deal with a non-core project where I think we'd spent about $1.5 million on the Murat Dere project, which is a copper porphyry, and decided that a few years ago we would suspend work on that because it looked marginally economic. The metal prices improved. We dusted off the project and brought in a Turkish partner. They paid us $1.7 million for 51%, so we were ahead in financial terms. We still retained 49%. And then they are earning up to 70% by undertaking a feasibility study on the project and also making another $500,000 of payment. So that's brought in more money. It's offloaded the responsibility for exploring that project to somebody else, because we believe that porphyry copper projects are not the sort of things that small companies should be involved in. They usually need an enormous amount of drilling, and if you're going to spend that much money on evaluating them, they're usually going to be a big project and there's going to be enormous capital at the end of the day. So we're much happier to end up with 30% of a hopefully economic project at the end of the feasibility study, and we can decide what to do with it then.
We've tapped into a very exciting and I suppose emerging area within the sector. Where would you say are other growth areas that the company has its eye on or sees a great potential for growth?
Turkey is relatively mature. It's the place where we started off. We found over 2 million ounces of gold there altogether. And 3 or 4 years ago, we decided to go looking for somewhere else where our blend of skills could be put to good use. And we latched on to the Rift Valley in Ethiopia, which we think has some parallels with the gold discoveries made over the last 20 years in Patagonia in South America. The geological environment's very similar. Our executive director, who's in charge of East African operations, David Hall, was the exploration manager for AngloGold Ashanti in South America and was intimately involved in the exploration of that Patagonian province. He saw the similarities in Ethiopia, and we've acquired a substantial land position there. So we're looking for reasonable scale but high-grade gold deposits in Ethiopia. Being the first company to look for these, because nobody's ever looked for gold in the Rift Valley before, and being the first company to drill, we looked at the risk of that, and we decided that we would divide our project up into two halves. We would joint venture half of it to AngloGold Ashanti with their Middle Eastern joint venture with the Thani Group out of Dubai, so that they could take the risk of the first drilling in this area themselves. We retained half of the project in the northern part of Ethiopia. We've still got 95% of that, so we still get a big bang for our buck on that one. So we're quite excited about that. They did carry out one round of drilling. They're now planning to follow up on that this year in Ethiopia near the Djibouti border. They have a drill program in Djibouti, and we are currently in the middle of a 5,000 metre drill program on our wholly owned area in the north. That's maturing nicely. We've now been there, as I said, for a few years, and we're beginning to see the fruits of our labours. So we thought it was time to look further afield again to keep the portfolio, the pipeline of projects intact. So we were fortunate enough to come to agreement with a small private company called Silverex, which we acquired at the end of 2011. They had one quite attractive property in Senegal and some other not so well explored properties in Mauritania that we're just beginning to look at. The Senegal project is on the same geology and the same structures as many of the more recent large discoveries in Senegal and in Mali over the border. We're very optimistic about this, and we have, after doing a year's on-the-ground reconnaissance work, soil sampling and pitting and trenching, we've just embarked on a 30,000 metre drill program, and we expect the results from that to start coming through in the next few months.
The company obviously goes into areas where they'll be classified as frontier markets, I suppose. Lots of potential, but maybe underdeveloped infrastructurally. So what would you say with those countries that you're now going, whether it's areas like Djibouti or Senegal, what are the inherent country risks or maybe legal pitfalls that may cause issues when it comes to exploring and developing?
I think the first thing that you have to look at is the security of tenure, the mining law, and the ability to get hold of an exploration project and know that if you find something, you're going to be allowed to put it into production. This comes down to the Mining Act. And we reviewed the situation in Ethiopia, and we found that the mining legislation there we felt was more attractive than the surrounding areas. The same goes for Djibouti. You then have to deal with the bureaucracy and entrenched interests if there are any. The nice thing about Ethiopia is that the population is very sparse. We don't really have any settlements anywhere near where we're operating, so we don't have to deal with local people. But when we do come across the local people, we obviously take care to explain who we are and what we're doing, and to employ them wherever possible on the projects. In West Africa, I think things are a little more settled. Senegal is a well-established democracy. The legal system is French, which is slightly different from what we're used to. But again, there is a proper rule of law. We have a partner in Senegal who's very well established in the country and knows the right people and knows who to go and see if you have any problems. And we've had no problems operating there. I don't think we've had any difficulties with people requesting payments for things that you shouldn't be expected to pay for. We wouldn't pay these anyway, but we're fortunate in that the countries we've chosen to operate in, this is not part of the culture. Otherwise, you're looking at logistics. In Ethiopia, we have to deal with temperatures in excess of 50 degrees in the summer, which is very hot, so things tend to go a bit quiet then. You have to make sure that you have the right medical facilities and camp facilities there. Senegal is easier. There are plenty of competitors working around us, and getting around is easier.
As you said, the last year has been quite pivotal for Stratex, and there's been a lot of exciting developments. What other milestones do you see in the short term, or maybe even in the medium term, that you guys are eyeing as, I suppose, but the milestones or cornerstones of the company's strategy?
Well, I think the thing that sets us apart from a lot of our peers is the fact that we're capitalised at around £20 million. And at the moment, I think we have somewhere around 75% of that represented by cash. We've got 16 or 17 million pounds as a result largely of the sale of the project in Turkey. This puts us in a very, very strong position. We also have to close one more disposal deal. We were unable to reach agreement with our Turkish partner on a very small gold deposit that was ready for production. It's fully permitted, but it's only a 60,000 ounce total reserve. The feasibility study shows good returns, but our local partner decided that they didn't want to be in the gold business anymore. And the only thing that we could do with them was to try to sell it. We have agreed to sell that to a Turkish operating company for $10 million US, and we are due to receive 45% of that over the next 2 or 3 months as that deal is closed off. So that's going to add to the cash pile. The operations that we're involved in now, we should see drilling results from both East Africa and West Africa, and maybe one small drill program on a project in Turkey. This fell out of a strategic alliance that we have with Antofagasta, the large copper company. They're only interested in copper, and we came across something with some gold potential, so that's come out of that as a bonus to us. So there's the ongoing exploration, but with approaching £20 million, £18 million in cash, I think, we've got enough there for 2 years operation at the same level as last year. And by the end of 2014, we should have around that level, around £8 million, I hope, of cash flow from our operating gold mine in Turkey. So we're not looking to have to go to the market in the foreseeable future unless we have something specific to do. Which brings us to the other prong of our two-pronged strategy. One is to keep doing what we're doing and to take the projects further down the road towards development, and then choose to sell them, joint venture them, or get somebody else to put into production, but on our own terms and on our own timing. The other thing that we're looking at doing is we're systematically searching the 3 areas of operation, that's around Turkey, around Ethiopia, and around Senegal, for projects or companies that aren't in the same fortunate position that we're in. So we are looking for opportunities where we can apply a modest amount of money and make a dramatic impact on the value of the project, where we could take a discovery to a resource for the first time, where it begins to have an in-the-ground value of so many dollars per ounce, or we could take a discovery to the first economic evaluation, where again, instead of just having an arbitrary dollars per ounce in the ground, we actually get an evaluated value for the project out of a cash flow analysis. And we have built up our staff to help carry out that systematic search for opportunities, as well as dealing with the ones that are coming through the door, because obviously when you're not exactly 1 in a million, but 1 in quite a few thousand junior exploration companies that has enough cash for the foreseeable future, you find that some of the stressed ones start banging on the door and asking if there's any sorts of deals we can do.
Okay, well, thank you very much for joining us. That was Christopher Hall, Chairman at Stratex.